Tuesday, December 13th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at inflation and why a 2% inflation or CPI target, as they call it, would still be a theft of your purchasing power, of your savings, of your wages. Of course, before I start, I'd like to talk about Billy. And a lot of you know already that Billy passed on yesterday around 1:30 p.m. He was really struggling. And yes, he was 14 and a half, though. He had a good life. And I'd like to thank all of you for your kind comments. He's going to be missed, Billy. My wife actually had the idea of making Billy part of the Monaco 64 community a few years ago, probably 4 or 5. She said, why don't you put him on the sofa? And at that time, the sofa was over there, and I was doing the video from another angle. And I never thought he'd become so popular and so loved. And yeah, we all knew, of course, that this day was coming. And yes, a sad day. It was really tough. I couldn't really sleep very well last night. So that's it. I mean, there's some really good stories about Billy, but I'm not going to go through them. What I'm going to show you here is recently, a few weeks ago, or maybe a month or more, I forget. This is what he did at the beginning, or during a video where I was talking about hyperinflation. They created a monster. And yes, that's the whole problem. They created a monster. If they really wanted to deflate the system, everything would collapse like a house of cards, and they can't do that. So this is just the kind of stuff he would do, and inadvertently that made people, I guess, love him. And of course, he always snored a lot. He snored since he was a puppy, and we even made a mug. Billy says, snore on and keep stacking. And we designed this mug even before the silver squeeze movement, because we've always believed, of course, in stacking gold and silver physical. So here's to Billy, and thank you for your kind words. So yeah, we're going to look at inflation. We're seeing a lot of course, comments from central bankers, from economists, that they expect what they call inflation, or CPI, to drop to 2%. And why do I say use the air quotes? Because I think this is the reason why we're going to get massive price rises. We're going to get high probability of getting hyperinflation. Yes, some of you believe we could get very high inflation but not get to hyperinflation, and that's possible. Nothing is certain in life, of course. But I always go back to Felix Sommery, who was one of the most influential bankers in the first half of the 1900s. He even advised the US Treasury in the run-up to the Bretton Woods Agreement. He was originally from Austria, but settled in Zurich, Switzerland. And this is what he said about inflation. I'll just show you what he said. So yesterday, yeah, it was tough in the afternoon. It was really tough after we came back from the vets. But I was looking through Twitter, and I saw some tweets from Robert Reich, or Reich, if you want to call it. He was the Secretary of Labor under the Clinton administration, and he was opining on inflation, and he said that it was all the fault of the big corporations. And yes, it's totally, I mean, it's blaming the wrong people, right? It's the bankers, it's the central bankers, and the government. And even yesterday, we saw some data from the U.S. government. And the Sirius report, Paul from the Sirius report, he tweeted out, U.S. winning again. I guess he was being sarcastic. Federal spending $501 billion in November, 6% increase year over year. Government receipts $252 billion in November, 10% decrease year on year. Economic and fiscal realities are clear for all to see. You see, that's what inflation is. It's when the government basically, well, I don't like to call it, but they basically confiscate goods from the private sector through deficit spending, and the central bank makes it so it's easier for them to do it. Yes, granted, since the end of last year, the Fed has been raising interest rates, but rates are still negative in real terms compared to how fast prices are rising. Yes, they're telling us that CPI is going to drop to 7.3 today. That's the key number, of course. But we know that prices are rising a lot faster. We can all go to shadowstats.com and see that if you calculate prices, how they did in the 1980s, it's more like 15 or 17%. And as I've said, CPI is not inflation, and that's why I think they're going to get it wrong. Everyone's going to see this decrease in CPI, maybe down to 5, and they're going to say, oh, inflation's finished, and then the Fed's going to pivot and accommodate, and we're going to get more inflation. Inflation, yes, it's very simple. It's inflating the money and currency supply, which dilutes the currency. And the people who already have currency, they get burned, especially people who are not wealthy. Wealthy can always protect themselves because they can buy assets and protect themselves against the currency debasement. They can get rid of the watery milk. That's what it is. They're just putting water in the milk. And all of a sudden, things are getting more expensive, not because prices are rising, it's because the currency is dropping. So I think someone from the Bank of Canada, I think the governor of the Bank of Canada yesterday said that, yes, inflation's still really high, and we need to go back to our 2% target. And I did a calculation because I think I answered that tweet with, well, 2% CPI or inflation is still theft of the public. So what I wanted to show you, because, there's this talk, 2% inflation is good. But you just have to look at this inflation calculator here to see that 2%, let's say over 20 years, inflation will have risen by almost 50% over 20 years. And let's say that it's 3.5%, which is probably a lot more likely because there's a lot of talk nowadays that getting back to 2% is too detrimental to the economy. It will create unemployment. So they're talking about 3 or 4. But look at that, over 20 years, you get almost 99% inflation with a 3.5% target. So what's the solution to this? Well, the solution is to abolish the central banks, because the central bank monopoly and legal tender laws really give the government, through its deficit spending and its issuance of debt, in conjunction with the central bank manipulating interest rates, it allows this to happen, this inflation. But with no central bank and the sound money system, it's very hard to inflate because money will be sound. It will be based on real wealth, not on something created out of thin air. So that's my message for today. Don't buy into these inflation or CPI targets. We shouldn't have any. And in a perfect world, I would say, we wouldn't have central banks, and we should still push for that, of course, and the Fed and the BOE and the ECB. So with that, let's quickly look at where the markets are this morning. Yes, of course, we have CPI today. The CPI is expected to drop from 7.7% to 7.3%. That's for the month of November on an annual basis. Monthly is expected to drop from 0.4 to 0.3. The core CPI is expected to drop from 6.3 to 6.1. And I think we got some data in Europe as well. We had the German CPI, actually. That came out at 10%, was as expected. Previous number was 10.4. And yes, we'll wait and see for that. Tomorrow, of course, we've got the FOMC decision. Fed expected to raise by 50 basis points, and we have Jay Powell's press conference, and I think they're coming out with their forecasts for the economy going forward. We got the Bank of England as well on Thursday. It's a very divided, people think it's a very, very divided decision, but they'll probably raise by 50 basis points, and the ECB as well this week. So it's 8:45 a.m. London time. We've got spot gold, our favorite kind of money, along with silver, up 4.8% or 0.25% at 1786. High's been 89, low has been 80. And Rafi Faber said something interesting yesterday in this video, and I'll put a link to it in the cards and below in the description. It was about, I think, the Credit Suisse Zoltan guy talking about oil for gold. And he mentioned the manipulation of the paper market. And he said something that was really interesting. The reason they can manipulate gold, not just gold, but other commodities, is that it's not a settlement currency or money. It's just traded as a commodity, so they can throw paper around it. But if President Putin or Russia decides to sell their oil for gold, for grams of gold, that will change everything. And that's what could basically destroy this big short position that's always hanging over most of the time over the gold market, the spot market. So I thought that was interesting take by Rafi. We've got silver up about 7 cents at 23.36. High's been 52, low 27. The stock market futures are all virtually unchanged, so I won't go through them. Currencies as well are pretty much unchanged this morning, very steady. Let's check the other currencies here. The Aussie dollar, on the other hand, is up about 0.5%, 67.73. The dollar is down 0.2 versus the Canadian, 136.07. And the Kiwi dollar is up 0.25 at 64. So let's look at the general commodities and also platinum, of course. Platinum's stuck around the same level as yesterday. It's 1,005 bid at 1,010. It's up slightly, so holding on around that $1,000 level. Brent crude is up 1.7%, just below 79.50. WTI is up 1.6 at 74.30. High grade copper is up 0.7% at 383. And US nat gas is up 2.8% at 668. The Dutch nat gas futures is down 1% at 135. Let's quickly look at the bond market. Bond market could move today, could be volatile with the CPI data. The 10-year yield has been creeping back up. I think we were around 3.5 late last week and earlier this week. It's now at 3.60. It's unchanged. The 2-year note yield is down 3 basis points at 4.37. So there you go. Again, thank you for all your kind messages about Billy. And are we going to get another puppy? Well, right now, I think we're going to take a break. We would love to have another puppy, but we'll probably have to wait to sometime next year, maybe in the summer or spring, because it's easier to train them when the weather's better. So there you go. I wish you all a great day. Take care. Bye.